Today's episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we wrap up the trade and head to the Christmas holiday and look ahead to 2023, saw a fairly positive day on Friday. We're going to talk about that. We're going to talk about these markets as a whole as we get ready to wrap up the year and head on to 2023. We welcome in our good friend Ted Seifried with Zaner Ag Hedge joining us here today on the show. Ted, good to catch up with you, buddy. Merry Christmas. Hope you're doing well.
Merry Christmas to you too, Jesse. I am doing fantastically. I hope you're doing the same.
I am doing as best as I can with all the cold weather impacting all of us here across the country and the blizzard conditions. And we hope everyone's staying inside, staying warm, staying safe. And, I think a lot of traders, they headed out early. I mean, Friday's trade, it was a positive day, but just kind of that low volume holiday type of trade. We caught a little bit of a strength in grains, and it seemed to kind of hold there as we went through the session, Ted. That's what it felt like to me anyway.
Yeah, a lot of times, between these three, although I'm actually calling this a 3.5 day weekend because it's a hard open Tuesday morning, no Monday night session. But a lot of times in front of these holiday weekends, especially this holiday weekend, we'll trade for the first hour and a half, and then after that it gets really quiet. And that's, and then maybe a little bit of ubiquitous, whatever, a little profit taking at the end of the day. But yeah, for the most part, we started out trading fairly solidly, first thing in the morning, and then we just kind of held it. Friday was a bit of a risk-on day. You'll get crude oil up $2.30 as well. There's just money coming into commodities as a whole. I don't think it's a huge amount. I don't think it took a whole lot of volume to make that happen, really, in any of these markets. But it's good to see some risk-on happening, in front of the holiday. So we'll see. As far as grains are concerned, we are still rather concerned about South American weather and Argentina in particular. Are those rains going to... they've been able to get a few rains come in, right? And so what the trade's wrestling with is this a change in the weather pattern overall? Are they going to be onto a better weather pattern, and are things going to really start to improve for them? Or was it just a one-off thing and then go back to the hot and dry scenario? We saw crop conditions, Thursday afternoon coming out of the Rosario Grain Exchange. Not good, especially for soybeans. But it is early, right? This is very early for the Argentina growing season. You talk about Brazil's first crop soybeans, they're going to start harvesting in a week or two. But for Argentina, there's a long growing season for them, and things can change dramatically. So we're kind of hanging on that, which is what we do this time of year, really every year. And the other big thing is going to be what happens on that January WASDE report, quarterly grain stocks report, final production report. There's like 4 reports wrapped into one on that January 12th USDA data drop day.
Yeah, and that's going to be a big key as we think ahead, because really it just feels like the next week plus this market's probably just going to drift at least until January 3rd when we really get to into the new year. Traders kind of come back in full force, and really that next goalpost is that USDA data dump there on the 12th. And I will be curious to see how the market reacts to those numbers. Ted, what does USDA give us? Are there any surprises? I feel like that could maybe keep us a little bit sideways and choppy until that report, Ted.
Yeah, I would think so. There's a seasonal tendency to see corn in particular kind of drift higher between the December report and the end of the calendar year. And there might be more of that. We really only have 4 more trade sessions before that happens. So there might be more of that. It might be just absolutely quiet. It could be very choppy. Who knows what next week? We really don't ever know what to expect in that week between Christmas and New Year's. But then game on once we get back, like you said, on January 3rd, as we start preparing for that USDA report. It's hard to say what what that report is, what it's going to be versus expectations, because we don't know the expectations quite yet. Guys like myself will get pulled on that in that first week when we get back on the third. And it's a funny thing, Jesse, when they start polling the analysts and the analysts start putting some thought to it, you start to see the market kind of reflect what those expectations are. So again, as soon as we get back in January, after the first couple of days, I feel like we're going to start getting a lot more active than what we have been. And again, I'm very curious to see what the overall expectations are for the report. I can tell you that I have not done my numbers yet, and I won't do them until we get back from the New Year's holiday. But I will also say just sort of my initial feel, without going into the numbers and without dissecting it as I do, I'm gonna say I don't really feel like the production numbers, especially for soybeans, are going to be tremendously bullish. We had that big cut back in the September report, and I think they might walk that back just a little bit. I wouldn't be surprised if we were to find a little bit more soybeans out of the production side from last year. At least that's my feeling at the moment. And I say that just simply because, it doesn't seem like our exporters or our crushers are all that concerned about the tight balance sheet that we have, suggesting to me maybe there's a little bit more soybeans out there. It could also be the fact that the Brazilian crop looks really good. It'll be coming online fairly soon. So there just doesn't seem to be that sense of urgency out there. Like I said, I will go deeper into the numbers, over the course of the next couple of weeks, and we'll have more to talk about there when we talk next time. But my initial, first glance, I wonder if this report in January is going to be as bullish as the trade I think is going to want it to be. And so that becomes a bit of a concern for me. And then it ties back into South American weather, which also ties into exports. But if we are going to get a report that doesn't continue to lower production from last year, continue to tighten the balance sheets, well, then we'll look at South America. And if Argentinian weather is getting better and Brazil looks really good, their harvest for first season soybeans is really good, well, then it really kind of gets a little bit tough to maintain the bullishness needed to keep these prices up at the elevated levels that we're at. So I think South American weather is really going to be paramount in that first, 2 weeks of January. If we don't have a big story to talk about there, I get a little worried that maybe we could break a little bit going into planting.
As the markets tend to kind of drift here this next week or so until we get to the new calendar year, what are your thoughts on maybe putting some of those quote unquote wish orders out there, locking in some floors, things like that? Just because if we get some of that volatile, low volume trade and get a big swing one way or another, what's your thoughts on that in the grains right now, Ted?
I mean, it never hurts to do that, Jesse, in any scenario, right? I mean, on any given night, something can happen that the market wasn't expecting, i.e., Russia invading Ukraine, things like that. I mean, we've seen so many times over the past few years, a big news event, trade wars, things like that really move the markets a lot in the night session, but then we're fading them by the time we get into the day session. So look, I'm a big fan of having resting orders just out there working. That being said, I think for me, I'm a little bit more cash sale orientated at the moment. I've been really trying to push guys to be a little bit more aggressive on marketings this year than most years. We've talked about wanting to be 40 to 50% sold on corn by the time we get to the end of the calendar year, which is only 4 trading sessions away. We've talked about being somewhere similar in soybeans, maybe a little bit more aggressive, 45 to 55% sold on new crop beans by the time we get to the end of the calendar year. And if you haven't gotten those orders filled, maybe you have sort of those wish orders out there for the next couple of trade sessions and then see what happens and, maybe pull the trigger right before New Year's. I'd like to see a bit more on the cash side. And the reason I say that, and we've talked about this a bunch, Jesse, if we're going to pay a whole lot for input costs, and especially for corn, we have to lock in the output costs. And if we're not paying attention and all of a sudden we come into January and that South American weather looks better and that report isn't tremendously bullish, and all of a sudden, we break 60 cents, 80 cents in corn, that's going to put a lot of hurting on guys that spent on the inputs but didn't lock in the higher prices on the output. So I think it's important to do that. I'm also going to say that puts are really cheap right now because we're not going anywhere. The volatility has been sucked out of these things. And so when you talk about puts, which should be really expensive at these elevated prices, they're really not historically bad, comparatively speaking. So you can go in and you can own March 640 puts for really, not that much. I was doing them the other day. Actually, they're really probably better, depending on what we do on Friday. But I mean, you're talking 8-9 cents for 63 days worth of protection for something that's 20-25 cents away from the market. In a 640 floor, I mean, wow, that really helps you sleep at night. Especially if you've paid for the higher input costs, you at least know that's your worst case scenario on the board. So things like that, I really do think we should be fairly aggressive with our marketing strategy when we have really good prices. If we were trading 360 or 380 corn right now, and you feel like there's not a whole lot of downside potential there, yeah, you can wait, store and ignore, all that. But we're not in that situation. There's so many things out there, Jesse, right now that can really burst this bubble. And who knows what it'll be. It will happen at some point. Who knows what it'll be and who knows when. The best thing you can do is just be prepared for it, have those floors in place, have those cash sales made. And just like I said, options are cheap. Well, if you want to make cash sales and then own call options to re-own the opportunity to the upside, hey, that's a viable option too, because those aren't terribly expensive either. So there's a lot of things that can be done right now, and there's a lot of things that I think really should be done right now.
Ted Seifried, Zaner Ag Hedge, is our guest analyst here today. Ted, I know you like to talk about this crude oil market, and I love to get your opinion on this crude oil market. You've, said a few times you feel like it's the canary in the coal mine, and I agree with you on that. I saw a report Friday that it sounds like Russia might cut production 500,000 barrels a day in the new year. I wonder if that had any impact in Friday's trade in the crude oil market, and also too if crude oil kind of spilled over and gave support to the grain trade on Friday, Ted.
Yeah, it certainly did have a positive influence on the crude oil market on Friday. Whether we believe them or not, I think is a completely different story. I don't know. But no, that did definitely help crude oil there on Friday, and you'll get soybean oil up to 120 or so. That was helpful. So yeah, and like I said, I mean, it really contributed to the whole risk on idea there on a Friday. So all the way around, that strength in crude, that helped. Now that being said, crude oil running into some overhead resistance here. I could see crude pulling back and maybe carving out a bit of a bigger bottom. I don't think there's a whole lot of trade below $70 in crude oil, mainly because I really do believe that we would aggressively start refilling the strategic oil reserve at that point. I think we should be doing that. So I'm not calling for crude at $30, things like that. I mean, look, anything can happen, crazy stuff, but short of a big fundamental change in the whole macroeconomics of the global economy, I don't really see crude needing to go to, $40. I don't see much trade below 70, let alone especially 60, right? So I think crude is going to be on a mission to carve out a longer term bottom. Now, that being said, when we talk about crude as a canary in a coal mine, crude has broken much more off of its highs than the grains have. And a part of that is because of the late season dryness cutting our crop from last year. So what I don't want is people to think that if crude starts to rally, that necessarily means that grains have to rally, because the fundamentals in crude changed a lot faster than the fundamentals in grain because of that production issue. I still think there's more downside in grains, even if crude is coming up. If we can string together a couple of good production between South America, first and second crop in Brazil and Argentina's crop, if that starts to improve, and we get off to a good start on our growing season, I think there's a lot of thin air below us. So it's nice to look at crude as a canary in a gold mine, canary in a coal mine for the investing sentiment in commodities as a whole. But it's also important to realize that each one of these commodities that we trade have their own individual set of fundamentals that can override the overall fund sentiment on commodities.
Livestock trade, as you and I talk here, we don't have the cattle on feed or quarterly hogs and pigs report numbers in front of us, but it feels like everyone expecting those to be neutral to friendly, especially on the cattle side. It felt like Friday's market trade headed to Christmas was just kind of chopping around, squared positions ahead of those reports. But as you look at this protein sector overall here as we near the end of the year, any thoughts that stand out to you there right now, Ted?
Yeah, I mean, the cattle on feed report, like you said, we haven't seen that yet. But the expectations for that, I mean, are very much reflective of the expectations for a big drop in supply over the next 3 quarters. I mean, we're looking for cattle on feed to be, I think it was down 2.6%. We're looking for placements to be down, 4.5%, and marketings to be up almost 1%. So those are the expectations. A lot of that's been factored into the market. If those drops in productions don't occur, that'll be a really bearish thing and take away a lot of the reason and rationale for why we are quote unquote up here, and why we broke into new recent highs there, or new contract highs there on Wednesday. But for the most part, I do think that that drop in production is coming. That should keep a rather nice floor underneath the cattle market. Again, I'm going to say all things remain the same. From an economy perspective, from a domestic demand perspective, export demand's not been great. We'd love to see that pick up a little bit. But if our domestic demand stays strong and we have this shrinking supply situation, then these prices are justified, Jesse. And then we could actually see more upside potential if people do start picking up their because we're looking for that production job to last through the third quarter. So now go out and think about what that means for the spring and grilling season and things like that. I mean, it's pretty optimistic, but again, that's assuming that we don't go into this big recession that really everybody's talking about, and we don't really see the fear that comes from, oh, my 401k just got slammed, I might lose my job, my house is, things like that. If those things don't happen, yeah, I do think there's more upside potential in the cattle market.
Well, Ted, let's break out the crystal ball a little bit here. And in your thoughts, what should we have learned about our marketing strategies and plans as we look back at this volatile, wild year we've had in 2022? What should we have learned, and what do we need to think about and take into 2023? What's on your mind as we turn the calendar over? So kind of a two-part question there, Ted.
These are always the favorite questions that get asked on these sorts of things at the end of the year, aren't they? Well, what should we have learned? Look, I think I'm going to roll the last few years together. And basically, Jesse, I think what we have to say is that, anything that can happen likely is going to happen, it seems, between pandemics, trade wars, and actual wars, and who knows? You really have to be on your toes. Fortunately, the year of 22, most of the things that did happen were actually quite positive for the markets. Go back a couple of years ago, and that was quite the opposite. So, you have to be prepared for really anything at this point. These are global markets. We're not just trading grain fundamentals or livestock fundamentals. It is a much broader picture nowadays. So you have to be really tuned into that, and you have to realize that there's risk out there at all times. I'm also going to say that, I don't love cliches. I feel like I probably use them more than I want to. But the cure for high prices ultimately is high prices. And we've been on the higher historical end of prices for grains for some time now. There will be something that changes that. Ultimately, that will create demand destruction. Ultimately, that will bring all of the production available out of the woodwork. And ultimately, we're going to get back to a situation where we are overproducing, or we're oversupplying the demand. And when we do that, we'll go back to the other end of the cycle. We'll go back to the lower prices. We will have a market that is trying to cut out the acres and trying to encourage demand. So it's important to really sit here and think about that, and over time, how we need to be positioned for that. It's absolutely paramount that we take advantage of the good times so that we can prepare for the bad times, because the bad times will happen again.
Well, Ted, great thoughts. If folks want to reach out to you and get some advice and work with you on their marketing plans there at Zaner Ag Hedge as they look to the new year, what's the best way to get a hold of you, Ted?
Yeah, Jesse, absolutely. You can reach me directly at 312-277-0113. That is my direct line. Aside from that, you can find us on the web at www.zaner.com. You can read a bit about us You can also sign up for our morning Ag Hedge newsletter, which is written by my buddy Alex. He does a really good job with it. It's not a recommendations letter though. It's just a newsletter. The recommendations come from us because we really try to tailor them to who you are, who your risk tolerance is, what your operation is, where you are on your cash sales and things like that. And then aside from that, if you're on Twitter, I'm at the Ted Spread. I like to have a little fun on Twitter.
Well, we appreciate the time and insight as always throughout the year. With that, Ted Seifried, Zaner Ag Hedge. I wish you a Merry Christmas, Happy New Year, buddy. We will talk to you in 23.
Thanks, buddy. It's been a great year. I've really enjoyed doing the show. Thanks for having me, and I really look forward to seeing you again in 23. Merry Christmas, Happy New Year's.
That's going to do it for Market Talk today here. Find us online, markettalkag.com. I'm your host, Jesse Allen, wishing you and yours a Merry Christmas. Have a great weekend.